Thanks for joining us. I'm Marlon Bowling with you. I am joined right now by Brian Hoops. He is the president of Midwest Market Solutions in Springfield, Missouri. Brian, we had a little bit of a lift in the grain markets after we got the WASDE report yesterday, and also after we got the crop condition report yesterday. How do you think the market overall is performing right now?
I like the action in the markets. We're moving higher, contract highs in Minneapolis wheat this morning. A lot of strength here in the grain markets despite a higher U.S. dollar. So all that is very encouraging. In addition, the forecast is really not ideal. The growing season hasn't been ideal. We've got a lot of rain in certain areas, but now they're starting to show signs, making its round on Twitter, wherever you want to look at, yellowing crops, too much rain, flooded acres. So there's a lot of crops that are really suffering this year. First it was from dry weather, then drought in certain areas, and now we're talking about too much of a good thing. And the forecast turns much hotter, and the trade is fearing that maybe some drier conditions along with that heat could lead to additional yield loss. And you look at the USDA numbers yesterday, they did not indicate any yield loss, but yet they're still at all-time record yields. And their crop condition ratings are less than last year when we had a crop of 172 bushel on corn. So, something's going to have to give at some point in time in here. I don't think anyone wants to be overly bearish based off of those factors, and the markets are putting in a little bit of premium in here with a lot of support coming out of canola futures, bean oil, and Minneapolis wheat.
Brian, you have offices all over the western half of the Corn Belt. And I just wondered if you could tell me what the deal is with this talk that John and I have been hearing basically about disease pressure in the soybean fields in the central Corn Belt. And Scott may ask about this as well coming up here, but I heard quite a bit of rumbling about that yesterday. Do you know what they're talking about?
Well, yeah, it's tied to too much rain. It was kind of the same thing we heard in the wheat fields of Kansas, Oklahoma a month ago when there was excessive rains there. Talk about fungicide and rust in some of the wheat crops, and that talk eventually died off as it quit raining and the suns came back out. And we're hearing that same thing across soybean fields around the Midwest, especially like Illinois, Indiana, where there's been so much rain and a lot of ponding. There's concerns about leaf stripe, some rust, maybe some fungicide in crops. There's just a concern about too much. You get anything in an excess, it can lead to detrimental results. You get too much heat, too much dryness, or if you get a situation like we're seeing in some of those central areas, too much rain without enough sunshine and warmer temperatures.
Well, let's run through these right now, and we'll start with the corn prices and our quotes provided by bar chart. On corn on December, now we're elevating up to go 9.25 higher. 5.42 and a quarter now, within a penny of our high of the day. And on the soybean market, you have the new crop November contract 10 higher at 13.60 and a quarter, showing signs of strength here. On the wheat in Chicago, you have September currently trading at 6.43. That's now 2.25 cents higher on the day. The Kansas City market has September now at 6.17 and a quarter. That's up 2 cents. We're within a penny of our high of the day right now. And on the Minneapolis wheat, September is now 11.75 higher at 8.69. Interesting how things are starting to elevate as we go. We'll come back and talk more with Brian Hoops right after this. Brian Hoops was just mentioning that canola market, and here's a look at what it's doing right now. And on the canola futures, you have November trading at $915 per metric ton. That's in Canadian currency. That means it's up $26 just today. What a move. We got as high as $9.49. Here's another one I don't want to leave out. Can't forget about this lumber market. Well, we have September lumber futures down $40.70 at $672.20 per 1,000 board feet. What a move that has had here today. It has been almost $5 less than where it is right now. So keep an eye on that one as well. The big moves continuing there in that lumber market. Now to livestock. In live cattle, we go to the August contract. We're still $1.22 higher at $121.05. That's a half dollar from our high of the day right now. In the feeder cattle market, you have feeders on the August down 27 cents at 157.87. It has actually had a fairly narrow trading range today. It's only about 90 cents wide, not even that. So it's a little bit odd on the feeders. You have September now just one tick lower at 160.97. So not much going on in the feeders right now, even with the gains we're seeing in the corn. On the lean hogs, the August is up $1.27 at 105.35. Remember, that closed $2.50 higher yesterday, so a pretty good-sized push here in the hog market this week. Brian, I saw earlier where we had some bids on cash cattle out in the plains at 119 to 120 today. The asking prices, last I heard, were 122. Have you heard anything in the last few minutes as far as an update?
Yeah, that's what I've been hearing too, Marlon. The asking prices in that 122 range on a dress basis. I think they're going to be a little bit more aggressive than they were last week. The numbers seem to be a little bit tighter, especially in the Nebraska region. I'm hearing some talk, maybe even 202 could be paid by the end of the week for a dress basis. So we'll see. Market is trying to anticipate with the cutouts kind of finding a bottom and stabilizing that. Maybe this futures market is working its way higher, trying to anticipate cash is coming up in that 121 to 122 range by the end of the week. But I guess we'll see. But it certainly feels like the cash market is going to stabilize despite a little bit larger show list this week compared to last week.
All right, anything on the equity markets and the role they may be playing in the livestock trade today? I see the Dow is down 37 points.
Yeah, down just a little bit weaker. We probably going to trade two-sided at times, but the fact that we've been moving into contract highs for the most part over the last 2 weeks, I think is, a supportive feature for the cattle market. We always talk about, strong economy will translate into strong restaurant demand, strong demand for beef at the consumer level, and I think that is certainly going to be the case this year.
Well, we always have to worry about disposable income. So thanks, Brian, for talking with us. Good to hear from you again. Brian Hoops, Midwest Market Solutions. He's in Springfield, Missouri. John, back to you.